What's going on, guys? This is Chandler Smith, and in today's video, I'm gonna show you how much money one rental property makes, or I guess should make. I'm also gonna show you how much $1 invested in real estate will pay you every single year. So with all of that being said, let's jump into it. All right, guys, if you're watching this video, it's most likely because you're thinking about buying a rental property, or you're just curious how much money you can make if you did own one. Either way, I'm gonna answer that question for you and most likely push you over the edge to purchase a rental property. All that I ask you to do is remember to smash the like button, subscribe to the channel, and hit the little bell. And with all of that being said, let's jump into it. Now, to be fair, I do make over $1 million a year from purchasing and owning real estate. And so I'm very biased in this video, but I can give you a very accurate picture of how much money you can make on one rental property. And I want you to know for every dollar that you spend, how much of a return you would get on that dollar if it was invested in real estate. So that's what this video is going to cover. To clarify, there are 4 different ways that you make money investing in real estate. The first one is tax benefits, which I told you we're gonna skip right over. The next one is principal pay down, then there's appreciation, and then there's cash flow. And so we're gonna go through these remaining 3 and show you how much money you would make on a rental property with all of these. So, principal pay down, here's how it works. When you buy a rental property, you need to choose whether you're gonna buy it with cash or whether you're gonna buy it with a loan. And I wanna make that decision for you because when you buy it with a loan, you get a substantially higher return on your money. If you wanna learn more about that, you can go and click this video. However, just trust me, buying it with a loan is going to pay you substantially better. It also gives you a whole nother way that you make money, and that other way is called principal pay down. And that's the first one we're gonna talk about. Now, when you buy with a loan, you're usually going to put 25% down. And that's the example we're going to use. Now, you can put down less, and I would even suggest it if it's possible, but for this example, we're just gonna put down 25%. That means you're getting a loan on the remaining 75%, and you're making a monthly payment on a 30-year schedule. Now, if you want to learn how to calculate all this and how to run the numbers and see what return you would get on a specific rental property, you can go and download my app. It's on the App Store. It's CDS Rental Calculator, and that's what I'm going to use to explain this to you. So when you pop open the app, there is actually a button that you can click after you've run the numbers on the property, which you can go and learn how to do that on your own, but you push See Amortization Schedule. Now, this is gonna show you how much of your payment is going to interest, how much is going to principal, how much you still own on the loan. And so I ran the numbers on a $100,000 loan. We're just going to assume that for this rental property, you spent $100,000. The reason I like this example is if you spend 200, 300, whatever it is, you just multiply it by 2 or 3, and these numbers should be the exact same, which is pretty cool. So on a $100,000 loan, you can see my interest payment and my principal. Now, this loan is drug out over 30 years. And the way that it works is early on, you are paying less towards principal and more towards interest. As the loan goes on, you're paying more and more towards principal. And the principal is like putting money into your home that's paying down what you owe, but that's still a return you get because now that's cash that is being put into the bank that is your property. And so when you start out, you can see you're only getting about $128 of principal pay down. If we skip forward 15 years, you're gonna be over $200 in principal pay down. And then if you skip to the end, you can see at the very end of your loan, you're getting $315 every month in principal pay down. So we're just going to say, to average things out and make them simple, that you're getting $200 every single month in principal pay down. That means that if you buy a $100,000 rental property, which means you're only investing $25,000, you're actually getting a $2,400 return in principal pay down every single year. So we're gonna put that up here, or over here, or somewhere on this screen, that you get $2,400 in principal pay down. Now we're gonna talk about appreciation. Now, appreciation is a little bit harder to calculate because it totally depends on the market that you're in and what that market is doing. Now, nationwide appreciation is anywhere from 3 to 5%. And essentially what it is it's just the fact that a property is going up in value every single year. Now, this can be caused by inflation, because if your dollar is worth less, then the property is going to go up in value just naturally because you need more money to buy the property. So that's one reason that appreciation happens, but also property just naturally goes up in value. It's just a cool thing about owning rental property. And that on average is between 3 and 5%. Now, in some markets, that could be 20%. In other markets, that could be 1, or your property could even go down in value. And that's why it's extremely important to buy in a market where it's consistently going up in value. I will not buy in a market unless I'm very confident that we're going to have that property go up in value by 5% or more every single year. And what's really cool about this is you bought a $100,000 property. You only put 25% down, but the property is going up by 5% or 3% or 10%, whatever it is, on the whole property value. That's another reason you want to get a loan on a property, because we bought a $100,000 property. So that property, we're going to say, is going up in value by $5,000 every year. The other thing that's really cool about this is now your property is worth $105,000. The next year, if it goes up by 5%, it's going to go up by more than $5,000. Now it's going to be worth, I'm going to do the math on that. Now it's going to be worth $110,250. Now, if you multiply that by 1.05, you're going to be worth $115,700. And every year it's going up by more and more and more and more. But for simplicity's sake, I'm going to be conservative, and we're going to say just $5,000 a year. So we've got principal pay down at $2,400. Now we have appreciation at $5,000 per year. For those saying, Chandler, that money isn't actual money, it's locked up in your property and you don't get it till you actually sell the property or you refinance or whatever else. You're right, but that's how a lot of investments are. You're putting your money in, it's invested, every year it's going up in value. And again, this was just one of the many ways that you're going to make money off of real estate. So let's jump into cash flow. Now, cash flow is probably my favorite way to make money off of real estate because it's money in your bank account every single month. And the way that it works is when you buy a rental property, you've got all of your expenses, right? You've got general maintenance, you've got taxes, you've got insurance, you've got whatever it is, maybe a management company that you're paying. And you also have your loan payment, which a portion is going to principal, portion is going to interest. We're taking out all of that as expense. Even though that principal is actually money you're making, we're gonna treat it as an expense, and whatever is left is your cash flow. And cash flow is so good. It's the best because it's money that shows up in your account every single month, and it is awesome. And just to overshare, and I hope you don't judge me for this, but from the 124 units of rental real estate that I own, my cash flow is over $500,000 a year. That means every year I get $500,000 after paying my expenses and everything. That is just money I've earned from owning rental real estate. But for you, you're wanting to know on one individual property how much you're making. Well, if you bought a $100,000 property, then you can do the math. Actually, I haven't really explained the math. The way that I like to buy rental properties is at a minimum, I want at least a 10% return on my 25% down payment. So if I put $25,000 down on a $100,000 property, then I want my cash flow at a minimum to be $2,500 a year. Now, on a lot of my properties, I'm getting 15 to 20% in cash flow, but I wanted this to be, again, very conservative on a $100,000 rental property. And so we're gonna say $2,500. So now you have $2,400 for principal pay down. You've got your $5,000 for appreciation. You've got $2,500 for cash flow. And just to make it a round even number, we're gonna say all in all, this rental property, again, without tax benefits, is paying you $10,000 per year. Now, I know this ended up very simple math, but honestly, this is the minimum that you should get on a rental property if you're buying it properly. So for every $25,000 you invest, you should be getting a $10,000 return. This ends up being a 40% return on your money, which means every dollar you invest, you should be getting 40 cents back. Every $10,000 you invest, you should be getting $4,000 back. And every $100,000 you invest, you should be getting $40,000 back every single year in a return for the rest of your life. Now, there are a couple things that I didn't mention. I had mentioned appreciation and how every year that should get bigger. Cash flow should get bigger every year as well, because as properties become worth more, rents should increase and your cash flow should increase as well. Again, your principal pay down is getting bigger every single year. Your appreciation is getting bigger every single year, and your cash flow is getting bigger every single year. These are extremely conservative estimates. As a matter of fact, there's even some other ways that you should be able to capitalize big on making money. One of them is adding value to properties, which I'm not going to dive into in this video. But essentially, when you buy a property, if you bought it under market value, like you got a really good deal and then you added value to it, that could add a ton of value for you. For example, I bought a $2 million property last year, but I knew it was undervalued. I went in, I did some simple renovations, I increased rents, and in 1 year, that $2 million property was worth $3 million. So again, I made $1 million like that because I knew what I was doing. That's on top of all of these other returns. So you could be getting as much as 100% plus return on your money every single year if you're investing in real estate. Now, I'm going off track. I hope I answered your question. Essentially, for every dollar you invest, you should get a 40% return on that money if you've invested it properly in real estate. So I'm hoping this has you hooked. Investing in real estate is the best thing that you could ever do. And if you want to learn how to do it, how to run the numbers, how to find good properties, and everything else, you can click the link down in my description and pick up my real estate investing course. It actually is doubling in price because I'm relaunching it at the end of the month. So you want to make sure that you snag it, because you can get it right now for only $250. Just use the $50 off code and you can get it. It will be jumping up to $500, but if you buy it now, you're still gonna get everything that I'm adding to it. And even buying it right now, it's gonna give you everything that you need to buy that first rental property. We're just adding in a ton of other information so that you can buy storage units, you can buy bigger multifamily rental properties, you can buy a myriad of other things, and you're gonna get it for the same price buying that course now. All right, that is it, guys. If you enjoyed this video, make sure you remember to smash the like button, subscribe to the channel, and hit the little bell. And we'll look forward to seeing you in the future videos. Thanks, guys.